This is Andrew Left at Citron Research, and I'm here today to discuss one of the best performing stocks on the NASDAQ over the past year. Not a cryptocurrency, not an artificial intelligence, no, not NVIDIA, but rather Shopify, a company that has mastered the good old get-rich-quick scheme. What's never discussed by Wall Street is the real business behind Shopify, and that's what you'll see today, and that's what you'll read on citronresearch.com. Shopify presents itself as being e-commerce solutions to small and medium-sized businesses. Sounds right. Shopify says they have 2,500 Shopify Plus merchants out of their universe of 500,000. Now let's say they have another 20,000 Shopify Advanced. So the question I ask you, the question that no one on Wall Street has addressed, is who are the other 450,000 merchants on Shopify? And that's what we'll do. But just like anyone who wants an answer, where are we going to go? We're going to go to Google. Just Google the word Shopify and millionaire. And sure enough, you see around 27,000 results. Then go to YouTube and put in Shopify and millionaire. And you'll see over 10,000 results. You'll see the good old pictures of the guys in the Lamborghinis talking about working at home, making millions of dollars. The same type of people who used to, yeah, you're right, who used to sell Herbalife. And now what are they doing? They're selling the Shopify websites. They're not selling them to business owners. They're selling them to people as opportunities to get rich quick. And now that we've mentioned the H word, being Herbalife, we might as well just go right to the Herbalife settlement with the Federal Trade Commission to show you how this will impact Shopify sooner rather than later. You'll see right there that Federal Trade Commission told Herbalife that they specifically prohibit them from claiming members can quit their job or enjoy a lavish lifestyle. Well, when you see what Shopify does, it's to a level that you cannot even imagine. You'll see right here on the Shopify website, they actually provide people with a sample resignation letter that you can give to your boss once you're ready to quit your job. That's something that Herbalife couldn't even imagine. Just when Herbalife would talk about a rogue distributor and Shopify would love to pass this off on someone else, you go to the next and we see on the Shopify Facebook page, 2,700 people become millionaires each day. And then we continue on with Shopify and we see become a Facebook millionaire. And on the Shopify website directly, the online stores for someday millionaires. Now, if I had to make a guess, I would actually say Herbalife quite possibly has created more millionaires than Shopify. But this is an issue with the 450,000 merchants that will have to be addressed with the Federal Trade Commission soon. On top of that, we see another issue with the FTC. What we see Shopify doing is selling business opportunities. Now, true, a good part, some of their merchants actually have physical stores, but the majority of them are just using some dropship method and buying an opportunity to make money. As stated directly from the FTC website, talking about the Business Opportunities Act, it's covered opportunities where a seller says it will help the buyer set up or run a business, for example, by providing the buyer with customers, accounts, locations to sell the products and services. This is exactly what Shopify is doing, is selling businesses. And as you'll see on the next page, one of their apps they have, Oberlo, is a simple way for sellers to go ahead, import items from AliExpress, and just drop ship them through Shopify. This is a business opportunity, and this will require the same business opportunities disclosures that others have in this country. And lastly, and quite disturbing, is we hear about Shopify constantly talks about their partners. On their last conference call, I think they might have had 13,000 partners. And you might ask, who are these partners? Well, a few thousand of them, maybe 1,000, might be technology developers, but the rest of them are bloggers and influencers and people that if you go online, you put in Shopify Millionaire, they're actually being paid by Shopify. And if you see right here at the FTC website, the FTC reminds that influencers and brands have to disclose the relationships. None of these relationships are ever disclosed on anyone about their compensation. Worse, if you go to the Shopify website, it discusses the affiliate program. It says the Shopify affiliate program includes bloggers, publishers, educators, and other inspiring affiliates. This is their partner network. Let's get a bunch of people who don't disclose they're being paid to say you could work at home, make a lot of money, and they're going to buy websites. And as a matter of fact, we go back to the Shopify website and we see 4 tips to help create a profitable affiliate blog post. Shopify is not only teaching you how to run a store, but how to make money writing a blog about Shopify. This is not an $11 billion company. This needs to get completely looked at by the FTC and completely looked at by Wall Street. So what's this company really worth? I mean, if we could disregard the fact that the company is operating outside the guidelines of the FTC, and if we can disregard the fact that half the revenue is not even SaaS revenue, but it's merchant processing revenue, and we also disregard the fact that this company has shown no scalability, no unit economics whatsoever over the past 3 years. And if we want to be overly generous and say they should be afforded the same multiple as best-in-breed SaaS software like Workday, ServiceNow, Salesforce, then the stock should be cut in half from where it is and be trading at around $55 a share. And that's before the FTC steps in. Why has the mainstream media overlooked this story? I don't know. Why did it take Citron to go find this out? I don't know. But it's there. And quickly, as you see it on the Shopify website, mark it and archive it. Because you heard it here, it will be off their website within 2 weeks. Now that we've called attention to it, let's see if those big posts still stay. Let's see if the millionaire, and let's see if everything else that they tell you how to quit your job is going to stay on that site. We say no way. This stock is going lower. Cautious investing to all.
So clearly, Andrew Left, the head of Citron Research, makes some really good points about Shopify. But why should you care to really listen to him? And why should you care to listen to him right now? Since the video that was just presented was actually created in October of 2017. So let's take a look. I was actually fortunate to participate on my personal trades on some of on buying some puts on VRX. Andrew Left started discovering some negative things about VRX right around here. Shortly after that, as you can see, stock has moved higher. Since then, from 260 level, it has dropped significantly lower to about 160. I was able to short it, fortunately for me, right here. And I was able to close my positions at about 80 to 90 range. This is where I was closing. Now, since then, as you can see, VRX, Valiant Pharmaceuticals, had continued dropping and has made another substantial move lower and currently is trading at a level of $16, $17 a share, as you can clearly see it right here. So he has made some really good calls like this in the past. Now, what you will notice, just because he makes a particular call does not necessarily mean that the stock is a perfect stock to be traded in options right there and then. Let's analyze what happened actually since October with the Shopify stock. So, right around October, as you can see, the stock was trading roughly at about 120. This is the time when the report came out, the video that you just seen, and the stock took an immediate nosedive from $120 a share all the way to $90. Now, if roughly you had invested about $5,000 right here, you would have made about between $70,000 and $100,000 just on this drop alone. If you're looking for great opportunities like that, visit marketcrash.money, schedule a one-on-one consultation. I will walk you through exactly how you would have been able to do that on that particular trade. And also, I will show you some of the other stocks that may represent a great opportunity like that for some huge returns. Now, back to the Shopify situation. This is what we've got. So he made the announcement. The stock traded drastically lower on the announcement, but since then, it moved significantly higher. Now, actually, there's nothing that has changed as far as all the negative information that he has brought up in the video. However, there is more negative things that are on the horizon for Shopify on top of the data that was presented. And specifically, that has to do with the upcoming China tariffs. As you remember from the video, one of the points he mentions is that half of the revenue of Shopify is coming from merchant processing revenues. What does that mean? That means that once a person opens a website with Shopify and they start listing products that are dropshipped from China, then Shopify charges them a certain processing fee, which typically amounts between 2 and 3% roughly, depending on what type of account you actually have with Shopify. Well, with the rise in tariffs, since about 99% of the merchandise that's sold on Shopify actually is coming from China, this potential trade war could increase the costs of selling these goods in the United States, because they're all drop shipped from China from various merchants there, and they've been shipped directly to the households here in the United States. So if the cost of goods, which again represent about 99% of stuff sold on Shopify, if the cost of those goods increase, then a lot of people that have a website on Shopify, they're not going to be able to make profits, or they're not going to be able to make as much. Now, a second headwind is the fact that most of these websites on Shopify, they do direct advertising on Facebook. About 99% of them do Facebook advertising. As you know, recently Facebook has changed its website. It's redone the logarithm of the website, which means every time it has done it in the past, the cost of doing advertising on Facebook has also gone up. So anybody that owns a website on Shopify now has an increased cost of advertising. They have an increased cost of goods that are coming from China. Not only that, Shopify itself is facing some serious competition from companies that actually do not charge any sort of fee besides just the website fee. In other words, there are more and more competitors that have a model like Shopify, with the exception of the fact that they don't charge any processing fees. So as the competition heats up in this market, okay, a lot of people are actually switching accounts from Shopify to other merchants that do not charge them a 3% fee. That is another headwind for Shopify that could negatively impact its sales. Now, on top of all that, the online run your business type of crowd has seen a tremendous increase in the number of customers in the last few years. And what I am seeing, that it is at its complete peak. And as you can see, since the last drop, Shopify has been able to rebound, and it's currently trading about $147 a share. However, this may represent a perfect opportunity to buy some put options. Now, since we don't know exactly when the headwinds are going to hit this company, and when some of these negatives are going to start impacting the price of the company, we're not saying that the stock is going to ultimately drop tomorrow, or with the market open next week, or within the period of next week. So we're not suggesting a weekly option strategy. However, this could be a great stock to position for a long-term profit. And if it does anything similar to what VRX did, Valiant Pharmaceutical is the example I just shown, where it drops from $2.60 all the way down to $16. There's some fortunes that could be made on a significant move lower on Shopify. But if you're curious exactly what do you need to do, how to profit from such a move, please make sure to visit marketcrash.money. Schedule a how to profit consultation. It is a one-on-one consultation where we will walk you through entirely through each step of the process and how to put on strategy. And as a bonus, we will reveal one other stock that meets the criteria of Shopify that could actually produce even greater returns. So if you're looking how to profit from market fall, if you're looking to profit from stocks that are going to be heading lower, marketcrash.money is where you want to start. Schedule a consultation and get going in the right direction. Take action now. Do not miss this awesome opportunities. Thanks for watching. We'll catch you on the next video.